So it's a great time to meet. So we are going to look at published financial statements. So remember that this is a compulsory topic in the financial reporting and analysis paper. So when we talk about published financial statements, remember that we are focusing on the International Accounting Standards 1, whereby entities are supposed to prepare statements of profit or loss statements, statements of changes in equity, statement of financial position beside the cash flow statements. But for the cash flow statement is according to International Accounting Standards 7. So when we talk about published financial statements, these are statements prepared for the publication purposes, whereby most of the people will be relying on the audited version of these statements to make necessary decisions. For example, investors, that is even the public can rely on this the audited published financial statements to make decisions. For example, for investors to make decisions about investment, even the government will look at these published financial statements, the audited version of them, and many more users. So on this scenario, we are not talking about auditing. We are talking about how are these statements prepared. So that is what I'm going to look at. How do we prepare the statement of profit or loss? How do we prepare the statement of changes in equity? And how do we prepare the statement of financial position? Then once we are done that with those statements, I will come and look at the cash flow statements. Because in an exam setting, if they can ask the first three statements I've mentioned, that is statement of profit or loss, statement of changes in equity, the statement of financial position, if they ask the three, they will not test cash flow statements. They cannot test the cash flow statements. So either the first three statements or cash flow. So that is a compulsory thing. So either the first three statements or cash flow. So I've said there are statements meant for the publication purposes. So these statements include which one and which one. So the first one, the published, the one I will be looking at for now is all about the statement of profit and loss, statement of profit or loss. And we go ahead to look at the statement of changes in equity, statement of changes in equity. I will go ahead to look at statement of financial position, statement of financial position. Then finally, I will be teaching cash flow statements, separate cash flow statements. So I've said that when they test the first three statements, they cannot test these. But when they test cash flow, also they cannot test the first three. So it's either this or this one, according to the exam. So what do you need to know? Starting from the first one, statement of, that is statement of profit or loss. So for the statement of profit or loss, on this case, you need to understand how they are presented. So remember that the major thing here, NB, the main thing to note is all about the presentation of expenses. The presentation of expenses. So the expenses are presented on a functional basis. So the expenses are presented on a functional basis. I.e., that is under the following headings. So the first heading is all about cost of sales. You have the cost of sales. Expenses can be classified under cost of sales. Under admin, we talk about administrative expenses. We talk about distribution cost. And finally, I can talk about the finance cost. So expenses would appear under the 4 headings. So which are expenses which we can classify under the cost of sales? Some expenses to be classified under the cost of sales include the loss on disposal, things like loss on disposal, depreciations of assets. And the guys, make sure that your mics are muted so that we avoid a lot of background noise. So expenses to be classified under the cost of sales include expenses like loss on disposal, depreciations, and many others as may be guided. For admin expenses, these are the office-related expenses. Like now, if you are paying your directors, you are buying stationery, you are paying rent. So office-related, the administrative expenses. Distribution, the one which facilitates sale. Like now we have a carriage outwards. We have expenses like advertising. For the finance cost, interest expenses, the interest on loans, interest on debentures. So that is the major thing you need to understand under the statement of profit or loss. Then now you need to know how the format looks like. The format. So remember that you have to write the heading. Let's say, for example, X limited, statement of profit or loss. Statement of profit or loss. That is for the year. For the year ended a certain period there. For the year ended a certain period there. So remember that we start from revenue. Revenue same as sales. You know that? Or turnover. That is what you know. You did financial accounting. Then we raise the cost of sales. Cost of sales. We deduct the sales. After deducting the cost of sales, we get a gross profit. Get a gross profit. You can see under cost of sales, I've just written cost of sales. So one figure. So we don't go ahead and say cost of sales, then we start saying opening stock plus purchases minus closing stock. That one is done as an outside working, of which you have determined your cost of sales and you have included another relevant expenses, which was supposed to be included under the cost of sales. So you just bring one figure under the statement. So you get your gross profit. Here's my duster. So you get your gross profit. Then after the gross profit, you add some incomes. You add some incomes. So for example, investment income, rental income. Remember that they can be added there. Then you raise expenses, you deduct expenses. So which expenses can we deduct? Like now we have, I said, we'll be talking about admin expenses, others will, other than being included under cost of sales, others will be included under, that is, they will be classified under administrative, under the administrative expenses, under the distribution cost, So up to this point, we get profit before interest and tax. Profit before interest and tax. Then interest, remember, is all about the finance cost. Or interest expenses are classified under the finance cost. So up to this point, we get profit before tax. Profit before tax. Then we raise tax. We raise the income tax. So after that, we get the profit after tax. Get the profit after tax. After getting the profit after tax, so you know now we have to add, we can add other comprehensive incomes. Other comprehensive incomes, mostly you will find that there is a revaluation gain on the non-current assets. So you add to your profit after tax so that you get your total comprehensive income. Total comprehensive income. So when doing this first published statement, the statement of profit or loss. So the main thing you need to focus on is this one. Have you classified these expenses this way under these items, under these functional heads? So expenses are supposed to appear under the cost of sales. So that is, they are classified, under cost of sales, administrative expenses, distribution cost, and the finance cost. Then you understand the format and any other relevant workings to be done.
Mwalimu, I have a question.
Yes.
The format that you've given us, the format in the group accounting. Am I right if I say the only difference is the presentation of the expenses? Everything else is the same.
You see, that is correct, by the what you have identified is correct. That the way we consolidate the income statement of group, that format, it's the same as this. That format you are given under consolidation, the format for the income statement, the one you are going to consolidate, is the same as this. That is correct, Aiba Hassan, that is correct. So then, statement number 2, the published one, is all about the statement of changes in equity. Statement of changes in equity. Statement of changes in equity. So the statement of changes in equity. Statement of changes in equity. So remember that here we are going to talk about changes in equity components. So the changes of movement in equity items. So the main thing is the format for this. The main thing is the format. So here we talk about, so there are particulars. Let me just, so we have the particulars. Then we go ahead now to record the relevant equity components. You know various equity components. Which one and which one? Ordinary? Ordinary share capital. Another one?
Share premium.
Share premium. After share, sorry? Retained earnings.
Revaluation reserves.
Retained earnings. Revaluation reserves.
Can we include the general reserves?
We can have the general reserves, then we have the total. We can have the general reserves, then the total. So here we have the balances. We start with the balances as per trial balance. The balances as per the trial balance. Then after that, we talk about issue of shares. Issue of shares. Issue of shares, it can be at par. The issue of shares are at par affects what? Ordinary share capital. It increases our capital. Issue of shares are at par. And we have at premium. So for the at premium will affect the share premium. And you take it to the total. You can have a bonus issue, bonus stroke right issue. So this one, it affects ordinary share capital. Otherwise guided. Because when we issue a bonus, see, it's not about shares issued at no consideration. That is for free, based on a certain proportion. For example, for every 3 shares, the shareholders, the existing shareholders hold that relevant shareholder is given 1 for free at a certain price. No, not at a certain price, sorry, for free. Bonus shares is the shares issued to the existing shareholders for free, based on a certain proportion. For the rights issue, it's not about the issue of shares to the existing shareholders at a price which is lower than the market price, but based on a certain proportion of the shares held by the relevant existing shareholder. That is why we say it increases the capital, because it's shares issued. Maybe they will tell you this bonus issue, rights issue was financed by retained earnings, meaning that you have to reduce your retained earnings with that value of the bonus or the rights issue they made. Then here we can talk about profit for the year. The profit for the year. So profit for the year, it affects, we add the retained earnings and the total. Then we can talk about dividends paid. So dividends paid are paid out of profit. And we deduct from the total. Then revaluation gain. So revaluation gain, that is under revaluation. Then finally, we can talk about transfer to general reserve. Let me zoom this, just a minute. So transfer to general reserve. So you will find that there is a profit, maybe they were setting aside, maybe for the unforeseen future event. So there's some profit which they have decided to reserve. So we deduct that amount you are told to be reserved. So you deduct under the retained, from the retained earnings, you add it to the general reserve. So this one will be dash. So that is, we'll be having down here the balance carried down. The balance carried down. So that is the format for the statement of changes in equity. Then finally, I need to talk about the statement of financial position, but that one I will not draw the format because you know that what the statement of financial position contains. It contains assets and liabilities beside the equity. So statements of financial position. Statement of financial position. So for the statement of financial position, the statement of financial position. So here the main focus, the focus will be on the non-current assets, tangible non-current assets. So the tangible non-current assets are supposed to be done what? Are supposed to be classified under? Are supposed to be classified under the property plans, under the property plant and equipment. Using IAS 16. So we are continuing with the statement of financial position. So the statement of financial position, so I've said the main focus is for the tangible non-current assets are supposed to be classified under the property, plant and equipment, that is under using the International Accounting Standards. So International Accounting Standard 16. Anyway, this is the relevant standard for property, plant and equipment. The property, plant and equipment. So which are some of the tangible and current assets? E.g., the likes of motor vehicle. So you know them. The likes of buildings, the likes of land. But sometimes they give you land and building as one, called what? So when they use the word property and they went ahead to give you the one item, they can give you property in the additional information. Then they mention that the land is at 100 million. The total value of the property was at 300 million. The total value of the property was at 300 million. Property at 300 million, but land at 100. So meaning that the balance 200 is for what? The balance 200 is for?
Building.
That is for building. So you know others, like freehold, you know many other assets which can be put under these. The tangible ones, tangible and current assets. That is the one which are classified under the property, plant and equipment. But now for the others meaning intangible assets. Intangible assets are shown independently. They are shown independently. Intangible assets are shown independently in the statement. And you can be able to show them. You don't have to classify them under one item. If it's patent, software, you just mention them under non-current assets. So you know that the statement of financial position, you start with the assets which are less liquid to the one which are more liquid. I mean, you start with non-current assets, you go to the current assets. Then you talk about equities and liabilities, then you will be done. Of which you know that assets must be equal to capital plus liabilities. So you know this, the accounting principle, the accounting equation. And so once you know this, we can be able to go to the question of the day. And this one is the question for December 2021, question 5. Is there any clarification needed? And for the members who have joined this session, you are highly welcomed from the relevant groups of accounting. This is how we do live sessions through Zoom. You are welcome to be here in the coming sessions until August. What you need to do is just to make an arrangement with me for you to remain in this class for the coming days, because we do classes every evening, not every evening. That is Wednesdays and Thursdays, 8 p.m. to 10 p.m. I can put my number here for the guys who have joined today. Later, you will be able to talk with me if you would like to continue attending. This is 28,760,546. Let's go to the question of the day. That is December 2021. Question. December 2021 question. Question 5. Question 5. So December 2021 question 5. So I already shared the question. I already did a share of the question to the group. It's a WhatsApp group. For the other members, you know, almost all of you, you know. And you have that question, eh? Or you don't have. Is there anybody who doesn't have that question? Anyway, this is the relevant question of BAWAB Limited. The following trial balance relates to BAWAB Limited as of 31st March 2021. You are given the relevant items: ordinary share capital, share premium, retained earnings, property, plant and equipment, accumulated depreciation, inventory, trade receivables, bank overdraft, deferred tax, trade payables, current tax, revenue. And we have cost of sales. We have distribution cost, administrative expenses, dividends paid, bank interest. The main focus is on the additional information. How will you be able to interpret this? It's a very simple work. If you will familiarize yourself with this work. I know now you are okay with group, because we already did the group. Mulielewa group. Wakuu. Omari, how are you? Habari yako Omari?
Safi kabisa.
Are you from Nyamira or Kisii?
You know, my name is Omar Ismail.
Oh, not oh, I was mistaken. Omar, not Omar.
Yes, Omar Ismail.
Oh.
So generally put itself as Omar.
Oh, it's fine anyway. That is fine. So, additional information number 1. On 1st April 2020, the directors of BAWAB Limited resolved that the financial statement could show an improved position if the property was revalued to market value. At that date, an independent valuer valued the land at shillings 160 and the building at shillings 485. The remaining life of the buildings as at that date was 25 years. BAWAB Limited does not make a transfer to retained earnings for excess depreciation Ignore deferred tax on the revaluation surplus. So this is just revaluation. We'll check for revaluation gain because they did a valuation of those assets. So there was a valuation which was done. So we need to check if there is a revaluation gain or loss. Number 2, plant and equipment is depreciated at the rate of 15% per annum using the reducing balance method, or depreciation is charged to cost of sales. So the examiner is becoming more specific. Is telling you that all depreciations take them to the cost of sales, but none has yet been charged on any non-current assets for the year ended 31st March 2021. Boab Limited estimated that an income tax provision of 113.8 is required for the year ended 31st March 2021. The balance on the current tax in the trial balance represents the understroke of a provision of tax liability for the year ended 31st March 2020. As at 31st March 2021, the tax base of Boab Limited's net assets was shillings 292 million less than the carrying amount. The income tax rate of Boab Limited is 30%. Number 4, Boab Limited made a 145 bonus issue. So before you go to number 4, remember number 3, they are just talking about tax. This is where now your International Accounting Standards 12 is supposed to come into your mind. IS 12 means accounting for income taxes. We did this. When you are making provisions, you make provisions for income tax and not income tax, current tax and according to IS 12, we are supposed to make provisions for the current tax and deferred tax. You remember? Guys, when mulikuwa kwa your class from the start of the semester, you remember we did something like computation of current tax and deferred tax. That is the knowledge you need to apply in Note 3 to determine your income tax for the year. Number 4, Boab Limited made a 145 bonus issue on 31st March 2021, which has not yet been recorded in the books of account. The company intends to utilize the share premium as far as possible in providing for the bonus issue. You are required to do 2 statements: statement of profit or loss and a statement of financial position. Once I will be done with this question, I expect you to do the receipting. But I will share it. I have already tackled it. I will share the video for that. But again, I have not said that I will only do 1 question for published. No. Published, at least I do 5 questions. Sikienda chini kabisa ni 4. After published, remember published, I mean the first 3 statements, I do 4 questions, let's say. Then we go to cash flow, we do 2. And remember, these are the 2 topics. The first topic I said, which is in exam always, is group. The second one is this one. So the third one is financial analysis. The ratios, or the use of common size method to analyze statements. Then between branch and partnership, they test 1. So msione tuko nyuma sana. What we are doing, we are within our required timetable of covering the syllabus. Sasa ni nyinyi musome, mwanze kusoma. Read from the word go. I mean, like now, yesterday I did a question of group accounting. Have you repeated the same question at least? Have you repeated the same question without looking at the answer? Just the same question. Then have you gone ahead to check maybe any other questions I've tackled? Have you watched? If you can be able to watch all my videos, that is, you have attended, yes, I have tackled some few questions. Go ahead and check some other questions I have tackled, but I have not done them in class. Those are enough for your exam. You don't need a revision kit. So, in published, you need to do some workings. I cannot go direct and do my statement of profit and loss. I need to do some workings, then I do the statements. So we need to start from working number 1, based on note 1, whereby there is we need to check for a revaluation gain. We need to check for a revaluation gain stroke loss. So based on which assets? On 1st April 2020, the directors of Bawabu resolved that the financial statements could show an improved position if the property, consider using the word property, if the property was revalued to market value. As at that date, an independent valuer valued land at 160 and building at 485. So you come here and say land, we have land and we have buildings. We have the buildings. So here we have the revalued amount. The revalued amount. So the revalued amount is 160. And we have 485. 485. Then you compare with the net book value. Net book value. Net book value. Net book value. So the net book value, remember, is all about the cost minus accumulated depreciations. But for land, we don't have to deduct depreciation. So you go to your trial balance. From the trial balance, land is, you can see they have said property. Have you seen that? Sorry?
146.
They have given us the word property at 146. So let's put this one in thousands. So shillings in thousand. So I increase this. This one was in millions. So this one would be 146,000. Then for building now I need to deduct. For building, I have to deduct depreciation, the accumulated one. So if the land is at 146 and the total was at 732, total is 732, meaning building is 732 minus 146.
586.
That is the cost. Minus accumulated depreciation for us to get net book value. Accumulated depreciation for building is 122,000. So meaning this is 464. So there was a revaluation gain. Because they are from 146 to a revalued amount of 160, from 464 to a revalued amount of 485. So the revaluation gain is 160 minus 146, 14,000. 485 minus 464, 21,000. So you add total revaluation gain. Total revaluation gain, that is 35,000. 35,000. Then after evaluation, remember our building now is stated at 485. Then they went ahead to say the remaining life of the building as at that date, was 25 years. So if you are given the remaining life, the remaining useful life, you go ahead and determine what? Depreciation. So working two. So that is after evaluation and divided by the remaining life of 25 years. So 485,000 divided by 25. We are getting 19,400. Next. Additional information number 2. Plant and equipment is depreciated at the rate of 15% per annum using reducing balance method. Again, we have depreciation. Remember, this one was depreciation on building, on the building. And we have depreciation on the plant and equipment. So we have 20% times what? 20% or 15? It was 15%. Cost minus accumulated depreciation. That is a reducing balance method. You have to take the cost minus accumulated depreciation. The cost of the plant and equipment is 427 minus accumulated depreciation of plant and equipment being 85,400. $427,000 minus 85,400 times 0.15. So this is 51,240. Remember, for reducing balance method, you have to say cost minus accumulated depreciation, then times the rate. Now, after that, we go to additional information number 3. Tax. Now here you need to contribute. Here you have to contribute. Because for me, for tax, for the income tax, let me start due. For the income tax, we have to talk about the current tax plus or minus increase or decrease in deferred tax. Increase or decrease in deferred tax. Then we say add tax under provision minus tax over provision. So it's very simple if you can remember that, how we are supposed to get deferred tax, because that is the only difficult thing here. For the current tax, is the tax which is supposed to be paid in the current year under consideration, or we they made a provision for that. In note 3, they said that Bawab Limited estimated that an income tax provision of 113,800 is required for the year. So that is the current tax for the year. the current tax. Then they said the balance in the current tax in the trial balance represents under stroke over provision. So here we have a current tax of 113,800. Then they are going ahead to talk about the balance of the current tax in the trial balance. The balance of the current tax in the trial balance, the balance of the current tax in the trial balance, which is which amount is that? If you go to the trial balance, we have 12,800. This one can represent either over provision or under provision. Over or under provision. But over or under provision of previous year. Of previous year. Of previous year. Under or over. So how would you know that it's an over provision? So remember that if we made an over provision of tax in the last year, in the current year, what will the over provision do? What will it do to the tax we are supposed to pay in the current year? If it's under provision, if it's an over, sorry. Let's start with over. What will it do to the tax of the current year? Will it increase or reduce? Ita increase ama itapunguza?
Increase.
Remember, it's an over provision of, if we made an over provision of the previous year's tax, we
will reduce the tax.
It will reduce the tax of the current year. That is why we deducted years, even use this. If it's an under provision we made in the previous year, it means that we have to pay, we have to provide for the under payment we did last year. So it will increase the tax of the current year. So meaning that if it's an over, it's an income because it reduces tax of the current year. If it's an under, it's an expense. So expenses are in the trial balance, they are debited.
Mwalimu, I think the tax over provision will increase. That's why we are minusing.
No, it will reduce, not increase. Unataka kusoma next semester, umenilipa leo. Will you pay me next year the same amount? If I will charge you, let's say you are supposed to pay me next semester 10,000. You have paid me today 2,000. How much will you pay next year? Will it increase or reduce? You will pay me 8. How will it increase? Have you understood from this concept? You are supposed to pay 10, you have paid 2 already. So you will pay 8. How will it increase and it's a deduction? It will reduce. Anyway, that is the explanation I can give you. And that is what happens. Huh? So this current tax, was it on the credit side or debit? The 12,800. It was on the credit side, meaning that is an over provision. So it will be deducted. And now we need to check deferred tax. I think you are done with this. So deferred tax. When we talk about deferred tax, is equals to deferred tax is equals to what? That's what I expect an answer from you, guys. Tax is
temporary difference times the tax rate.
Temporary difference times tax rate. We have types of temporal differences. Which one and which one?
Deductible.
You have taxable and deductible. So you can be given either, or if you are given both, you net, then you multiply with your tax rate. So you can be given this or this. So if you are given either, you just multiply with your tax rate, you get your deferred tax. If you are given both, you net, and if you mean it, that means if you are given 30 and 10, the difference will be 20 times tax rate. You get your deferred tax. So in this question, you were given which one? So for taxable, we say taxable temporal difference is when? Is when the carrying amount does what? Is greater than tax base.
The tax base.
And this one is whereby the carrying amount is less than tax base. Because carrying amount itself, not carrying amount, temporal difference itself. It's all about carrying amount minus what? Tax base. Carrying amount minus tax base. So which type of temporal difference were we provided with? In the last sentence of note 3, they said that as at 31st March, remember we are looking for the deferred tax as at 31st March 2021. So they said as at 31st March 2021, the tax base of Bawabu's Limited's net asset was 292, less than the carrying amount. Tax base less than the carrying amount, meaning that the amount is greater than the tax. That is a taxable temporal difference. Which is 292,000. So see, now to get the deferred tax, we do what? We take 292 times 30%. That is the rate. So the deferred tax as at 31st March 2021 is 87,600. Remember that I was looking for increase or decrease. You can decide to draw a T account, deferred tax account. Remember, you talk about balance pro down and you talk about balance carry down. So balance carry down is the one we have computed here, 87,600. Well, this one is our site, 31st March 2021. Meaning that the balance brought down is under the trial balance, and that one is provided as 97,600. So meaning that there is a reduction by 10,000. That is a deferred tax expense or income. Deferred tax income. So that we have, it has reduced or increased. The difference is supposed to be on this side, not this side. So the 10,000, which is a reduction by 10,000, which is a deferred tax income. That is 97,600. 97,600. So meaning that it's a decrease, we minus 10,000 here. So if you do this way, the answer would be the income tax to be applied in the income statement 91,000. That is fine. That is fine. The last thing to be done, there is additional information number 4. Then we do statement of expense allocation. So Boab Limited made a 145 bonus issue. So there's a bonus which was made. Bonus issue. So bonus, a 1 for what? 1 for 5. 1 for 5. Bonus issue, which has not yet been recorded in the books of account. So remember that a bonus, I said, is the shares which are issued at no consideration. The shares which are issued at no consideration to the existing shareholders based on a certain proportion. Like here, they are being given 1 share for every 5 they hold at no consideration. How many shares are the shareholding holding? So for the company to raise a capital, so the capital was 560,000. The price per share is shillings 10. The price per share is 10. So for them to raise a capital of this, how many shares they issued? 56,000. So now we need to closely multiply for us to know the shares issued through bonus. That is 56,000 times 1 over 5. So how many shares they issued through bonus? 56,000 divided by 5. 11,200. So this is the number of shares issued through bonus. So these are the shares. So we need to know the value. We need to take 11,200 times shillings 10, the power value. Get 112,000. Remember this one was financed through what? Through share premium. Was financed through share premium. So what are we supposed to do to a share premium? Credit or debit? Debit. Because now it's reducing your share premium. Then the capital is increasing. Ordinary share capital is done what? Credited. Before now we do the last work, before we go to the presentation of the statements, because now for the presentation it's just a direct work. There's a work here we need to do. Remember, this is a number for the guys who joined today who would like to continue attending these classes. You can get me through this number. We arrange on how you will be remaining in these sessions. I think we have around 2 or 3 new members here on the groups. So next is all about statement of expense allocation. Statement of expense allocation. So the statement of expense allocation, remember I said expenses are supposed to be classified. This is a working. Expenses are supposed to be classified under cost of sales. Some goes to admin. Administrative expenses. Some goes to distribution. For finance, I don't write it here because finance is just interest. I will do it direct in the statement. There's finance, but I don't have to show it here. That one will be done direct in the statement of profit or loss because it's just interest. So the cost of sales as per trial balance, as per the trial balance, the cost of sales is provided at 2,006,900. Admin, from the trial balance, we are given at 201,300. Our laptop is going off. Sorry for that. My laptop was almost going off. So 201,300. Then for the distribution is 164,700. 164,700. Then now you go ahead and check from additional information number 1 to the last one. The workings we have done. Where do we have expenses to be classified under these functional heads? So like now in note 1, there was depreciation for which one? For the building. It was? You are the one who have the figures. I don't have the figures. Or again, I do it. Either you give me, or again, I do it. Let me pick my calculator. Depreciation on buildings, it was? After evaluation. Remember, after evaluation of the building, it was at 485,000 over the useful life of 25 years. To report and guide
19,400.
19,400.
19,400. You classify under cost of sales. That is what they said even in note 2. There's a sentence they said somewhere in note 2 that all depreciations is charged to cost of sales. But none has yet been charged on any non-current assets for the year ended 31st March 2021. That is why we did, and we are now doing the relevant recording. Depreciation on plant and equipment. It was depreciation on plant and equipment, guys. 51.
51 to 40. 51 to 40.
Correct. I've recorded that. No, the 3 was tax. We don't have to record tax here. Another expense. Note 4 was bonus. And once we are done with the additional information, go back to your trial balance. Try to check if there's another expense which is there to be classified under these functional heads. I don't see another expense in the trial balance other than the bank interest, which is the last item in that trial balance, and it will be classified under the finance cost. So what you do, give me the balance carried down here. Give me the totals anyway, not even balance carried down. It's not even a must to give it a name. You see 201,300, 164,700. 2,006,900 plus 19,400 plus 51,240. 20,77,540. So then I will come here and say Powerable Limited statement of profit or loss. That is for the year. For the year ended 31st March 2021. So we have shillings in thousands. So we start from revenue. I say this one can be sales, or it can be called turnover. So this one is 27, 160. Then less the cost of sales. This is working. That is why I did this. We have 2077, 540. So that here we have a gross profit of Joel. How are you? Joel. $701, $620. So after this, we talk about expenses. Is there another income? There's no income to add. If there was income, I could have added. So there's expenses. So we have the admin, administrative expenses. So shillings are thousands. So yeah, admin was 201, 300. Distribution cost is 164, 700. Yeah, we get profit before. Interest and tax. So 701, 620 minus 201, 300 minus 164, 700. This is 335, 620. So finance cost now is when we deduct the bank interest, which is supposed to be classified under finance cost. That is an interest. So that we get a profit before tax. So this is 324, 640. So income tax, 90 what? It was 90. We did our working.
$91,000.
91,000. So profit after tax 233, 640. Then add other comprehensive incomes. Other comprehensive incomes we were having an evaluation gain of an evaluation gain of
35,000.
it was
35,000.
35.
Total comprehensive income. So starting from this point, so remember that after getting profit after tax, we were supposed to raise dividends paid, add retained profit. But if we were to prepare the statement of changes in equity, these were to appear in the statement of changes in equity. But now, since we are not told to do the statement of changes in equity, you have to deduct the dividends paid and add the retained profit brought down, that is brought forward from the previous year. You get the retained profit for the year, add other comprehensive incomes, that is an evaluation gain on the land and building. We did working one for this, so that we get a total comprehensive income. Going to the second part of the question, the first one, the only working we have to do is the classification of the non-current assets, the tangible ones, the tangible non-current assets under the property, plant, and equipment, whereby, remember, we had land, buildings, and plant and equipment. Land and buildings were revalued. Right now, land was revalued to 160, buildings to 485. But remember, it was having a remaining useful life of 25 years, meaning that we have to do depreciation for it using a reducing balance method, using a straight line method, sorry. That is 485 over the 485,000 divided by the 25. That is how we got 19,400. We deduct. And for plant and equipment, it was on reducing balance basis. So we have to take the cost. We deduct the accumulated depreciation and the depreciation for the year. That is what is, that one is giving us 290,360. Then we get the total for PPE to be shown under non-current assets. So we can go ahead and now present our statement of financial position. It's all about Bawabu Limited. We have the statement of financial position. As at 31st March 2021. So you have shillings in thousands. So we start with non-current assets. So for the non-current assets, we talk about property, plant, and equipment. So for the property, plant, and equipment, 950, 960, Is there another intangible assets, maybe like softwares, patents, trademarks that we don't have? We go ahead to talk about current assets. So for the current assets, we start with stock, inventory, the closing inventory. The closing inventory is given in the trial balance as 324,500. Then we have to talk about the debtors, trade receivables. Trade receivables, that is 469,700. After trade receivables, we have to talk about, is there any bank balance, cash in hand? No, so meaning we have only this, That is total assets. So equity and liabilities. So we talk about equity. Ordinary share capital. So our ordinary share capital is, the value of the ordinary share capital is 560,000. So we need to add 112,000. But this one was the bonus, the shares which are issued through bonus. And they were financed through what? A share premium. So our share premium must be reduced with the same amount. So the share premium is stated at 160,000 minus 112,000. And after that, we talk about the retained earnings. Then we talk about the revaluation. Evaluation surplus. Evaluation surplus was 35,000. The retained earnings, that is retained earnings for the year, just the figure above this, figure above 35,000 under the income statement.
For 5,800.
This is just above this, before adding 35.
The 4,800 is the retained earnings, not the share premium.
Oh, this one is 48, and for 5,800. This is total equity. Then we have non-current liabilities. Do we have a non-current liability? Non-current liability. Any? We have deferred tax. So the deferred tax, the 292,000 times 30%, we got 87,600. Remember, this is the deferred tax as something. This date, 31st March 2021, according to note 3. The taxable temporal difference of 292,000 times 0.3. Current liabilities. Trade payables. Our trade payables. 259. 86. Then we have bank overdraft. These are bank overdraft. When you take more than what you have in your bank, there's an overdraft of 43,100. Yeah? Then finally, current tax, the provision, the one they were supposed to pay for the current year from Node 3. Boab Limited estimated that an income tax provision, and they estimated they have not paid. They're supposed to pay. That is a liability, 113,800. So total equity and liabilities. So 915, 960 plus 324, 500 plus 469, 700. So this is total assets of 1710, 160. 1,710,160. 672,000 plus 48 plus 450, 800 plus 35,000. So this is 1205. This is 1,205,800. We continue adding with liabilities. This is 259. 860. 43,100. The 113,800. It's okay. 1710, 160. That is how you were supposed to do this question. That is how you are supposed to do this question. Is there any question? So you can try and look at our sitting was April 2023. Question what? It was question number? I think under our sitting, it's only one question I've not done. The recordings, that is, I have not done just the partnership question. But for the others, they are well solved. They are well solved. So for April 2023 is under question. Question 4. Question 4. So we can call it a session for today. We meet next time when I will be maybe looking at this, or you can watch also this one. It's online, it's there, it's there. It's well solved. You can go and look for that so that you know how it was supposed to be done. We can be able to do a different question other than this. I'm just saying that go ahead and look at my videos. Look at how this question was done. So I'm talking about this question here. Where is that question? Published. So the net realizable value of the obsolete good is 400, cost is 450. So on that case, when I will be doing my adjustments, the loss on stock, because some goods now are considered obsolete there. So loss on stock. I'm talking about this question. So you can go and watch how I did it. Whatever. AI tools can considered obsolete from the value of the goods. Anyway, you have. I will be able to share it. Interest is which will be classified under finance cost. And so this marks the end of the session. So anyway, I was showing that the question is there. So before we meet that is, at least you can be able to familiarize yourself with the sitting question. Have a good night. See you most probably on Sunday or willing. We will say inshallah. Tuonane chuma.
Sunday, what time, mwalimu?
Sunday ni jioni. Kama itakuwa ni jioni saa 2.
Okay. So.